Good morning. My name is Ryan Littlestone from forexflow.live. Today we're going to start by looking at the euro dollar, just a bit of a follow-up to the theme that's been going on of late. And we're going to start with a daily chart on this one. And we're seeing further bullish phases in this pair. We got above the 120 last week, made a very solid base there, in fact. And we've pushed on Sunday night. We've even hit through 121 barriers there as well, and they've been knocked out. But the price is a little bit deviated from that at the moment. We were sort of messing around this 121 area. We had the break, as I say, overnight, but it failed again this morning. And now we're just deciding what we're going to do. Chart-wise, you can see there that we've got a fib level round about that 121.0203 area. So that's still in the mix there. And that was basically the move of the year so far. And just above that, we've got the, again, just from the year, we've got a trend line coming down there from those recent highs. That's around 121.20. So again, that's adding a little bit to the resistant picture there. If we do get a break there, then potentially we are going to push on towards 122. We've got a level next around 121.80. Some minor levels, which aren't on the chart, but they come in around 121, sort of 30, 35, and then around 121.50. So small levels to look at there, but it's really again about seeing if we can manage to build a base here at 121. As I say, at the moment we're just a few pips under as I'm speaking here. We need to see whether we get back above, start building a firm base, and then potentially we get a big kick on towards 122 and those upper levels. Conversely, failure to get above this 121 then brings the downside again into question. Maybe a move down towards some of those lower areas, back towards 120, seeing if that holds again, and maybe we just start to see a bit of consolidation or a bit of short-term range. Obviously, the big feature this week is the US FOMC on Wednesday. Again, the market's going to start asking questions, the usual questions about when rates are going to start rising, when the Fed are going to start tightening, QE ending, that sort of thing. And one thing we got last week was the Bank of Canada, who were pretty hawkish in the end. They cut QE by 25%. Good forecast for the future for the Canadian economy, almost ignoring the current virus situation that's picking up there with Ontario, closing down or going into lockdown. And that again has now injected some bullishness or hawkishness in the market around other central banks. The Bank of Canada is now sort of top of the list. So what that's going to happen is potentially that's going to feed into the expectations for the FOMC on Wednesday as usual. Powell's going to get the usual questions. At the moment, we expect him to swat those questions away, any hawkish questions, because his plan is the plan. His script is the script. They're going to hike or eat or tighten when it's time to do so and not before. So as usual, we're going to get the jiggling about in positioning ahead of the FOMC. So we could see this pair euro dollar holding for a little bit until we get over that hump. Moving on to the next chart, again, a little bit of a catch up in dollar yen. Again, looking at the daily chart here. Weakness abounds. I had an area at 108 even to 108.30. That was a little zone I was watching to see if the sell-off from the highs paused there. It came through pretty easy in the end, and we've broken down quite significantly, coming back under 108 and struggling to get back above 108 even. So the bearish pressure at the moment remains in this pair. The next zone I've got that's fairly decent is down towards 107 and a bit under there. You can see the fib on the chart there, the 50 fib, again of the year's move, down at 106.78. So that's the sort of zone I'm looking at for the potential next support point if this weakness persists. If we get under there, then we're potentially unwinding quite a lot of the rally that we've seen so far. Anything under a 50 fib of a move tends to change the picture. But again, we're not out of the woods yet. FOMC coming up, still bullishness about the US economy and still some hawkishness about inflation and what the Fed might move earlier than expected. So a lot in the mix here, but as always, we look at the levels and we let the levels do the talking. If it breaks under that 107 area, 106.78 area, then again, that makes the picture more bearish. If we hold the area and stage a bounce, again, we might find a range and that keeps the rally going. Lots to look forward to, and with a big week this week, I wish you all the luck as usual.